How much gold and silver should you have in your retirement portfolio? 5–10%. This is the most common advice being shared nowadays. Is it correct? Is it smart? Is it enough to protect your savings during the next financial crisis? Let's figure it out. This is Jennifer. She's 25 years old, she just got her first job, and she's planning to retire in 40 years with $2 million in her 401k. Wonderful dreams. What she has today is a student loan, a small credit card debt, no mortgage, an income of $35,000 per year, and $0 in savings. There is nothing wrong with that because she's young enough to start investing. Should she start her investing journey with buying gold? Well, I don't think so, because we buy gold in order to protect our savings, right? Jennifer has no savings, she has nothing to protect. So this common advice of keeping 5–10% of your portfolio in gold is not suitable for her. She'd better read something like The Intelligent Investor and purchase some stocks. Tony is 43 years old. He already has $400,000 in savings. That's great, because more than half of Americans had less than $1,000 in savings last year. I don't know about this year. I think everything's about the same. Tony remembers the financial crisis of 2008. Oh, he does remember it well, even though 10 years passed, because during the last financial crisis he lost his job and 36% of his stock market investments. Today, Tony continues to invest in mutual funds, but in contrast to Jennifer, he has something to lose. He does have something to protect. Tony understands the importance of diversification, and for him, keeping 10% of his investment portfolio in precious metals might be a smart investment choice, because he knows that the price of gold goes up when the stock market crashes. So he hopes that precious metals, gold and silver, even though they do not generate any income in form of interest payments or dividends, will lessen the unpredictability of his investment portfolio. This is Bob. He is on the verge of retirement. He worked hard throughout his working life, regularly saved and invested 10% of his income, and in a year he will retire with over $1.5 million in his 401k and over $500 invested directly in the stock market. Bob doesn't care too much about making money, about turning his $2 million into $5 million. His main task is to protect his wealth against inflation and keep its purchasing power during the next financial shakeouts. Since for 10 years there has been no crisis, Bob understands that something unexpected might happen in the near future, so he decides to add physical precious metals to his 401k. What is great is that he can do the tax-free without any penalties or fees. So he turns to precious metals and invests 20% of his savings into gold and silver. You see, different life situations, different needs and different solutions. Another example, Jeremy. He's young enough to make money. He's young enough to start a business, to invest, but he's a single, negatively oriented person. He spends 3 hours every single day reading about conspiracy theories, watching these movies, YouTube videos, the national debt, the mark of the beast, and so on. He believes that the whole financial system will crash and that only precious metals will protect his savings. So his investing strategy is easy to understand and there is nothing to learn to implement it. He invests everything he has in gold and silver. 50% silver and 50% gold. Is it correct? Of course it's not, we will say, but for Jeremy it might be correct, it might satisfy his financial needs, his psychological needs, and he's not alone. There are a lot of people, some of them have YouTube channels, who believe that the government is going to steal, to confiscate our 401ks, that the dollar will collapse in the near future, and that's why they invest substantial parts of their savings in precious metals and hold them at home. What's my opinion? As I mentioned in my previous videos a lot of times, I believe in a bright future, but I understand the importance of diversification. Most financial advisors prefer to stay away from gold. Warren Buffett does not recommend to invest in gold. Since I am not a financial advisor, nor am I Warren Buffett, I believe that 10% of an investment portfolio should be in precious metals, because if something bad and unexpected happens and the price of gold and silver goes up, you'll have your gold and silver. If nothing bad happens, you'll make your 10% next year instead of 11%. This is my opinion. Let me know your opinion. Let me know in a comment section below this video your number. And don't forget to get your free gold investment guide. Just click the link below this video or click here and learn how to protect your wealth with precious metals. Subscribe and I will be happy to see you in the next episode.